A very good evening to all my viewers. My name is Rain, founder of Forex 100 Academy Private Limited. Today for trade ideas, we are looking at Euro Dollar itself. Euro Dollar, moments ago, there is a Mario Draghi press conference. They say that they're going to increase or rather extend their bond purchasing till September 2018. There are questions asking whether, since such extent in the purchasing of bonds till September 2018, question asked by the reporter, will there be enough bonds to be purchased? So throughout the press conference, Mario did say something like everything is still flexible, and the press release is going to release any moment from now. So let's say if you see a sharp drop or sharp increase in Euro Dollar at the moment right now when you see the video, just don't be surprised. Let me just walk you through what I see over here. Let me just clean up the chart a bit, look better this way. I did spotted a descending triangle. Alright, so basically what direction do you think a descending triangle will go? Market up or down? Yep, down. Alright, so I definitely got involved in the trade and right now looking for a new opportunity. I am slightly biased. My apprentice already when I chose to exit from the trade, my apprentice entered the trade because they have their own trading strategies. After looking up the course, they find one that match their trading style well, and when the market is going down, I'm happy for them because they're earning right now. However, as a trader and analyst myself, I do my own analysis. Do note that this is a 1 hour chart. So even if it break below, unless it close below at this candle, I will not do anything. And of course, after the video is rendering, if there is a update on entry price I'm looking at and stuff like that, I'll update to my chat group in Slack, so that my subscriber will get the most updated information. Alright, so what am I looking at? I do expect on the 29th of October, a market will slowly retrace back, provided it doesn't close below this red line over here. We call it the support line. And let me just turn the support line to blue. Might be easier for you. Alright, so the red is the current resistance and the blue is the support. So my strategy is waiting for the market to go all the way back up between 1.18 to 1.1820, which is pretty true that I do agree with my apprentice that this level has been tested quite a number of times throughout this month. Alright, if you are our subscriber, you have remembered that earlier on we did spotted this head and shoulder formation and we're shorting it. So this is not just a descending triangle. Further down, it will trigger the head and shoulder formation. So yep, the first way, of course, the preferred way for me to engage the trade is along this entire region. And of course, I'm looking at 1.18 to 1.1820 to engage for a shorting opportunity. My initial stop loss, let me just shift the chart a bit so I can draw it up for you. Okay, my initial stop loss will be at this price plus 20 pips above. That will bring it to 54 over here. Alright, so this is my initial stop loss. Target 1 will move all the way to this support level. Although I believe that if the market came back up to retest at this level, it is highly likely it will be the last test. Yep. Alright, if not, I will get worried. Okay, so this is the first level I'm looking at. Market pretty much respected this price. 1.1731 is a very strong support level. And of course, breaking downwards, I am still looking at 1.15 range. That will be the completion for my head and shoulder formation. Alright, so allow me to just show you the reward is to risk ratio profile. If you want to be conservative, you might want to exit 10 pips earlier, 1.1510. And of course, if you're aggressive, you can short till the end of the world, 1.1466. Alright, so I'm pretty happy with 1.1510. But I like to say that don't get too fixated on this trade itself. I do believe it will happen, but what I want to say that is the ebbs and flow of it. You see it hit the support, you acknowledge it's a descending triangle, you attempt to long it up. This is a big no because there are at least two underlying conditions in the technical aspects for trader to look for a shorting opportunity. First is the head and shoulder trader. That's the first group of people who are going to short the market. Second group of trader is your descending triangle trader. So please do not long this currency. Alright, that's my take. Of course, if you have back tested it and you know your strategy well, you know your win rates well, you're confident, you know what you're doing, you place in your stop loss, accept your downside, feel free to do anything you like to do. The entry price will for my shorting opportunity is preferred at this range, if not higher than this slanted trend line over here as the market move, because as the market move, this line will extend. Make sense? So it is okay for it to close upwards this way, but it is not so okay if the market actually let me just okay, it's not so okay if the market, or rather the candle based on 1 hour candle chart itself, time frame chart itself, close above this lower highs trend line over here. And of course, if you see that the market has really closed below, break below, close below, you can await for a retest. Okay, retest, a preferred, or rather a much more perfect retest will be somewhere around this range, which is the current support. It may turn to become a resistance, and stop loss really depends if you want to keep it here or the recent high at this range over here. Okay, so you might want to consider this as well. So that's all I have for you today. For my subscriber, no worries, I am full on euro dollar. I'll keep you updated on this if there's any changes to the formation. And formation, I don't see there's any changes, but rather the entry price and the stop loss level. That's all I have for you today, guys. And of course, till then, I'll see you on the next video. Plan your trade and trade your plan. Have a wonderful month ahead.